The Twin Cities real estate market just did something in the last few months that genuinely changes the math. Whether you're trying to buy a house or trying to sell one, inventory has jumped, and depending on which side of the table you're on, that's either the opening you've been waiting for or the reason why you need to rethink your pricing. This is your Minneapolis market update for June 2026, and I'm going to give you the real numbers and, more importantly, exactly what they mean for you. Not just stats, but what you should do about them. I'm Arne Johansson. I'm a realtor here in the Twin Cities, and I track these numbers every single month so you don't have to. If you're thinking about buying or selling this year and you want to know what this market means for your specific situation, your neighborhood, your price range, your timeline, there's a Calendly link in the description. Book a free 20-minute call and I'll walk you through it. No pressure, no obligation. So let's get into the numbers. So let's start with the number that matters most this month, because it's the whole story that's driving everything else, and that's inventory. The number of homes for sale across the Twin Cities is up substantially compared to a year ago. We're talking roughly 16 to 18% more active listings than this time last year. Now, why does that matter so much? Because for the last several years, the biggest problem in this market was that there was nothing to buy. Buyers were fighting over scraps. Now that's loosening. The Minneapolis Area of Realtors has basically described this as a healthy reset. More choices, less frenzy. And I can say honestly, that's really good because we need prices to cool down. So if you tried buying a year ago or 2 years ago and got beat out on 5 houses, this is a different market right now. And if you're a seller, this is the context for everything I'm about to tell you. You now have more competition than you did last year. So with more homes on the market, are prices falling? Not really. And that is what surprises most people. Here in the city of Minneapolis, the median sales price is right around $350,000 to $365,000 range, and across the board in the 7-county metro, it's closer to $380,000 to $390,000. Prices are basically stable. They're appreciating slowly, not the double-digit jumps like we saw a few years back. Here's what that means for you. If you're a seller waiting for prices to spike like in 2021 again before you list, that's probably not coming this year. And meanwhile, you're competing with more inventory. If you're a buyer who's been sitting out waiting for a crash, the experts are pretty firmly saying that that's not happening either. Equity levels are strong and lending is tight. And I would say that it's all about the price, the marketing, and the negotiating on whether your property sells for above list price in a really good situation or if it sits on the market. So the takeaway from both sides is the same. Stop waiting for a dramatic move that the data doesn't support and make your decision based on your own life and your own timeline. Now, here's the most useful thing I can tell you this month, because it's what I see people get wrong a lot. The market has basically split into two. Right now in the city, well-priced, move-in ready homes in good areas are selling fast. So like a sharp listing can still go about 3 weeks and pull in multiple offers, but overpriced homes or homes that need work are now sitting. Metro-wide, the average days on market has stretched to around 6 weeks, and price reductions have become more common. So what does that mean? Sellers, the market is no longer going to bail you out if you overprice your home. A year ago, you could throw a higher number out there and a desperate buyer might bite on it, but that's not going to be the case right now. Price is right out of the gate. If you price it right out of the gate, you're going to win. If you price it on your ego and it sits, it's going to go stale. and you're going to be ending up with lots of price reductions, and it might sell for even less than it otherwise would have. Buyers, if a home's been sitting for 45 to 60 days, that's your opening to negotiate. So the big question everyone asks, is it still a seller's market? And the honest answer is yes, but it's a softer one. Here's how I know. Month supply of homes. That's how long it'd take to sell every home on the market at the current pace. It's still low, somewhere around 1.7 months in the city and around 3 months metro wide. A balanced market is more like 4 to 6 months, so we're still well under that, which still favors sellers. On top of that, homes are still sitting at right around 100% of list price, and in the city, nearly half of all the homes are still selling above list price. So sellers still have the edge, they just can't be lazy about it anymore. The trend line is moving towards balance, and that's actually healthy. But if you're a seller, you're still operating from a position of strength this summer if you price it and prep it right. So let's talk interest rates because they drive everything on the buyer side. Earlier this year, the 30-year fix actually dipped below 6% for the first time in 3.5 years, and right now we're hovering around that 6% mark. That matters more than people realize. Every time rates tick down, the monthly payment on the same house drops, and buyers who are priced out quietly come back into the market. So here's what that means. Buyers, if rates are near the low end of where they've been, your buying power is better than it was, and waiting for them to fall dramatically further is pretty much a gamble. You can always refinance later if they do drop. Sellers, lower rates are good news for you too because they bring buyers back and support demand at a time when there's more inventory competing for those buyers. Buyers, this beat is for you because you have tools right now you didn't have 2 years ago. We have more inventory and homes sitting a little bit longer. Sellers are negotiating again. I'm seeing real concessions come back, sellers contributing towards closing costs, often more than $5,000, and mortgage rate buy downs where the seller effectively lowers your interest rates for the first couple of years. This didn't exist when buyers were in the bidding war frenzy. So if you're buying, don't just focus on the sticker price. Ask for concessions, ask for a rate buy down, and lean harder on homes that have been sitting. The leverage has shifted partway back to you, and a lot of buyers don't realize it. Sellers, knowing this is coming is exactly why you want to be price sharp. So you're the home getting the clean offers instead of the one getting nickeled and dimed. Two quick things about timing and location. First, timing. We're in it right now. Spring through early summer, March through June is the strongest stretch of the year here. The most buyers and most activity before things cool into the fall and the Minnesota winter slow down. So if you're a seller on the fence, you're sitting in the best window of the year as we speak. Second, location, because the metro is not one market. The premium suburbs with the top school districts like Edina, Minnetonka, Eden Prairie, Wayzata are carrying much higher medians, often well into the 5, 6, 700,000s, and value-oriented family markets like Maple Grove, Woodbury, and Apple Valley are where a lot of first-time and relocating buyers are landing. And in the city, the lake neighborhoods in South Minneapolis hold their value differently than downtown condos or North Minneapolis, which have been softer. Where you are inside the metro completely changes which of these numbers actually applies to you. So let me put a bow on it. If you're a seller in this June, you're still in a strong position and you can still do very well, often at or above asking price. If you're a buyer, you have more choices, more time, and more negotiating power than you had in years. Get pre-approved, be selective, and don't be afraid to ask for concessions or target homes that have been sitting. The one sentence summary of June 2026: the market is normalizing, inventory is up, sellers still have a slight edge, and buyers finally have breathing room. That's your Twin Cities market update for June 2026. If you want to know what all of this means for your specific home or your specific search, because the metro-wide number is never your number, book a free 20-minute call with the Calendly link in the description, and I'll run your neighborhood and price range with you. I post one of these every single month, so if you're tracking this market to time a move, subscribe and you'll never be guessing. You know exactly where things stand. And check out my full market update playlist right here to see how we got to where we are. I'll see you next month with fresh numbers.